Welcome to this month's Market Update. I'm here today with Dr. Vivian Xu, a member of Frontier Advisors' Capital Markets and Asset Allocation team. Hi there, Vivian.
Hi, Wei.
Well, certainly the first part of 2025 has been marked by volatility. I think fair to say some shifting sentiment, very positive, very negative. Let's take a bit of a trip around world markets, and we'll start with the US, if you can step us through what's been happening there.
Absolutely. As you all know, the U.S. stock market has seen large volatility recently. The investor sentiment has shifted sharply from extremely optimistic at the end of January to now excessively negative.
Yes.
And that was driven by a number of cross currents in the market globally. One of the catalysts was the Chinese AI firm DeepSeek announcement, and that started the investor questions around the U.S. dominance in the AI sector. And, now we're seeing the revaluation of the U.S. technology sector, which has been taking the hardest hit in this round of correction. Apparently, another significant factor driving the markets recently has been Trump's policy outlook.
Yes.
Especially Trump has been quite, Trump.
Yes.
That's uncertainty of Trump policy has been impacting asset prices and driving consumer sentiment coming down in most recent data. So in the midterm to longer term, we will still see that Trump's uncertainty lingering, and it will continue to be a significant factor driving the market going forward. On the macro side, we also see some softening in the data, which raised growth concerns in the U.S. economy. In particular, the inflation print has been higher most recently, which signals, the lingering inflation concern. And that is also contributing to the negative sentiment in the market right now.
Mm-hmm. Okay, well, let's move across the Atlantic to Europe. A little bit more resilience there, a bit of a surprise for investors.
Yes, the European equities have been quite resilient as opposed to the U.S. equities. And that was also driven by a number of European-specific factors. In particular, the war in Russia and Ukraine, there has been peace talks and discussions around, the potential ending of the war, which raises market hope for a more positive outlook. Another factor contributing to EU resilience is that the European Central Bank has been easing more aggressively than the Fed and other developed countries. They have already done 125 basis points cuts, and more are coming their way.
So if that's the developed markets, if we think about emerging markets, and perhaps if we keep traveling to the east, China and some political conferences that have been quite important in that area recently.
Oh, yes, absolutely. So in March, China has just concluded its so-called two sessions, which is a political meeting annually where higher-ranked officials elaborate on economic strategies and target for the year. So this year, the growth target has been maintained at the psychologically important 5% for 2025, although this is considered to be quite ambitious, given that in 2024, the Chinese economy has barely reached that target. The inflation target, interestingly, has been lowered this time from 3% to 2%, which signals authorities' acknowledgement of the deflationary pressure domestically, and it could mean depreciation of the currency to support export for this year. So yeah, very interesting time ahead.
I'll say. Well, thank you for that trip around the world, Vivian. And thank you for watching this month's Market Update.
Thank you.